Welcome back to Trading Hour on CNBC-TV18. Now we have the management of Sterlite Tech joining in with us, Ankit Agarwal, MD of the company, to talk to us about that big order win, which has led to such a run-up in the stock in just a week, 50% uptick, 5 days trading session. Ankit, good morning. Thank you so much for joining in with us. And, you know, this order that has come in is your demerged arm, right? Who's going to be getting this order? 2,631 crore. This is for with BSNL that you're talking about. So I just want to understand what is the role that Sterlite Tech will have in this? What is the revenue recognition that comes in for Sterlite Tech? And this order is like 3-year construction phase, 10-year maintenance phase. So which part of this will be actually with Sterlite Tech and which one will be with the demerged entity? Oh, okay. I think we've snapped the line with Ankit. We'll reconnect with him. But Urmas, this is a very interesting order, right? Like we were just mentioning, we marked it a couple of times, 50% uptick. This is actually for its demerged arm. They're going to be demerging the arm. So this is Global Services Businesses, which has signed the MOU. And this is a 2,631 crore, which is with BSNL. Mainly, they're going to be focusing a lot on designing, construction, installation. And this is going to be in Bharatnet's middle network, which is in Jammu and Kashmir. So that's the main focus area. Ankit, morning, can you hear me? And, you know, we're talking about the BSNL, you know, the agreement that you have with BSNL, 2,631 crore, a big one there. I want to understand Sterlite Tech's part in this deal that is there, because right now your demerged arm has signed this deal. So what is the revenue that comes in for Sterlite Tech and how long will it be, Sterlite Tech will be a part of it? Because there's a 3-year construction contract and then a 10-year maintenance contract. Good morning.
Yeah, good morning. Thank you for having me on the show. Absolutely, this is a very important win for us. It's the second time we are going to be building a network. Previously, we had built a 10,000 kilometer network in Jammu Kashmir for the Indian Army as part of the Network for Spectrum project. And we are very, very proud to be building now this network, which goes across every village in Jammu Kashmir and provides high-speed broadband connectivity. So this is a project which we'll build out, as you mentioned, for 3 years of construction and then 10 years of maintenance. So it's a long-term commitment to the region and will have a massive impact into the development and growth of Jammu Kashmir. This is a project which will be undertaken by Sterlite Networks Limited under the brand name Invenia. And we also have a partner in Dilip Buildcon who will be looking at the EPC part and the deployment part of this project. In terms of Sterlite Technologies Limited, which is this listed entity currently, they will be supplying the optic fiber cables and other components, optic fiber cables and connectivity solutions for this part of the project in Jammu Kashmir, as well as other bids get successfully awarded. We will also be supplying our cable and connectivity solutions to other projects as part of Bharatnet Phase 3.
Okay, Ankit, then what would be the revenue for STL recognition, revenue recognition for STL over the next 3 years then from this project?
Yeah, so typically, you know, in such projects, the optic fiber cable components are typically 5 to 7% of 5 to 10% maximum of the overall project, and on the capex side. So I think this is an important part. I think one part to highlight is that the Indian market itself, for part of that, the Bharatnet Phase 3 project will be an important growth driver, as we are seeing that both telecom operators are looking to add fiber for 5G networks as well as fixed wireless. We're also seeing more and more fiber for data center. And then now with this Bharatnet Phase 3, both at center-led as well as upcoming state-led projects, there should be meaningful growth in Indian demand as well.
Ankit, good morning. Thank you for joining in. So if I heard you correctly, 5 to 10% max of project capex cost will be as a revenue recognition for your company, right? Not for the demerged entity that has signed the order?
That's correct.
Right. And how about throughout the project life cycle, since it is a 3-year phase and then it is an operations and maintenance contract as well, does that continue in a similar trajectory?
Yeah, there's some smaller amount of fiber optics that goes in typically for repair and maintenance, but majority of the usage or consumption of the optic fiber cable is upfront, especially in the first 2 to 3 years. And this is across not just this project in Jammu Kashmir, but we will be actively supplying a good portion of cables and connectivity for other projects, other bids across the Bharatnet Phase 3.
And will this be margin accretive or margin dilutive, Ankit?
No, this will be margin accretive. This will be positive for our growth. As we've been highlighting that overall, currently we've been operating at around 50% factory utilization. So we have significant operational leverage as we look to fill up our facilities with growth, particularly in the US, Europe, and also with these kind of projects in India. We do expect that our utilization to go upwards of 70%. And there we have typically seen that our EBITDA margins will go from current 13 to 15% range to close to 18 to 20% range. So we are in that journey now over the next 2 to 3 quarters, and that's something that we're very excited about.
Sorry, this 18% range will be by when in terms of EBITDA margin? Just for a clarification.
Yeah, I think directionally we believe this will be towards the end of the year, and will be healthy for us to exit in that range. I
Sure.
think the whole thought process is that we keep looking at the markets, whether it's on the optic fiber cable for enterprise, 5G, and more for data center segment. And I'm proud to share that just recently we have just launched our entire data center portfolio
Yes,
stack. The
absolutely.
first Indian company to have launched this, and we're very, very excited to take the solutions for India, but also globally.
So how are you seeing that growth? That was my next question, right? This came in just yesterday. Your data centers, AI infrastructure market is what you're looking at. Next 2-3 years, what is it in terms of revenue for the company? How much is the incremental revenue we could watch out for now?
Yeah, absolutely. This is something just to give you a sense, as you move into more Gen AI kind of based data centers, you need 10 to 15 times more optic fiber inside a data center. So this is a kind of massive requirements. Today, we believe maybe 5 to 6% of the optic fiber demand comes from data center requirements. That's probably going to go towards 20 to 25% in the next few years. So pretty significant requirement. These are very specialized, niche, and high technology requirements, and typically they are bought as a complete solution of cable and connectivity together. So this is something that our teams have been working on diligently for more than a year. And now we're very proud to have launched this. Overall, our ambition is that 25% of our company revenue should come from enterprise plus data center. I think probably that will take us, a year or 2 years to get there. But this is a very important milestone for us. We have our own IP, we have our own technology partnerships, and we hope to make very strong inroads into the data center segment, both in India as well as globally.
You know, Ankit, I want to understand, because now the government is also talking about that push coming in for public sector telecom adoption. Could we expect more such, partnerships with like BSNL or something on that sort, or more network development? As well as in terms of the division of work, will it still go to STL networks or will it be with Sterlite Tech, such deals?
Yeah, so just to be clear, the whole objective of the demerger and now subsequent listing of Sterlite Networks is to have two very distinct entities. One is a hardcore high-tech manufacturing entity, which is Sterlite Technologies Limited, and then you have the services and system integration business, which is Sterlite Networks Limited. So these are the two entities, and very intentionally we have separated them, and we're very, very confident that both entities will scale up with time to come. Definitely, there will be areas where on arm's length, the two entities could look to do work together, where possibly the Sterlite Networks Limited could take up some projects and their Sterlite Technologies could support with its products.
Very quickly, Ankit, clubbing two questions into one. You mentioned a quarter of your revenue should come from the enterprise and data center businesses over the next couple of years. What does that do to your overall top line growth for this year and for the next, if you have a projection there? And by when does the demerged entity list on the bourses? Because you had mentioned earlier that it should happen by June or July this year. We're already into the mid of June. When does that happen?
Yeah, absolutely. So I think the whole thought process is, we do see top line growth, but more importantly, this is, as I said, a specialized and niche segment in terms of very high technology solutions. So what we are really driving is how do we have high EBITDA margins from the data center segment. Typically, we see from our peers who operate in the segment of at least 27 to 35% kind of EBITDA margins. So this is what we are looking at for what we sell into this segment. To your second question, in terms of how we're looking at the listing, I would say broadly we're about 30 to 40, 45 days from now. So we do still target to do this within July.
Very diplomatic answer on the first one. Ankit still did not give us a number. We'll hold you to that though. But thank you so much for sparing time and joining us today. Look forward to chatting with you again pretty soon after your quarterly results. The management there of Sterlite Tech, possibly the stock of the week so far.
Yeah.
50% higher in the last 4 sessions and another 14.5% in today's session. Slightly off the highs of the day though. But the management is confident that the demerged entity should list in another 30 to 45 days from now. By the way, just flashes on your screen, the consortium led by Dinesh Chandra, Agarwal, Infocom and Siemens has won a 4,100 crore contract. We'll keep that on our radar. Siemens currently 2.5% higher, just so flash on your screen. But with that, we call time on this edition of A Trading Hour from Winnie, me and the team that put this show together. Thank you so much for watching. We leave you with the Nifty still 75 points lower. Halftime report on the other side.